everyone, I'm Casey, and in this video I'm going to be going over Callaway stock. This is an update video to my previous version on the company. A huge thing has changed since then. As any of you who have been following my channel for a little bit of time, you know that I took a couple month hiatus. That's not going to be happening again because this news has to do with the Callaway merger with Topgolf, and that actually happened in November of 2020, so I'm a little late, but I definitely wanted to make a video on everything that's relevant now, which is a lot. I wanted to give my thoughts on it, reiterate how not only is this a great merger, it actually makes the future prospects of the company, if you are somebody who wants to bet on the future of golf, a lot better. It of course makes the company a lot more speculative, and we're going to dive into why. There's a great article I kind of want to go over with you all that analyzes all of the different financials of this merger and why it's a lot more speculative. But if you're somebody like me or somebody who's very bullish on the future of the golf industry continuing to grow as it's starting to see this little bit of renaissance, it actually is bullish for that case. So let's dive right in, and this should be a fun one. Okay, so first and foremost, the reason why this update is absolutely huge is previous to this merger, Callaway owned a small percentage of Topgolf. It was something like 15%, maybe 20%. Not a huge stake. A significant stake, but not necessarily a huge stake. And now, after this merger, the company is going to be 50-50. Maybe 51-49, I'm not entirely sure, but point being, it's roughly 50-50 Callaway and Topgolf. And so what this is doing is making the company as a whole, its valuation, a lot more speculative. And we'll kind of dive into the valuation and then where I think the company's stock is going in the short to medium term and then the long term. So the easiest way to go through this valuation, and I'll be putting up some screenshots from this article, it was a great one, is that because the company is now 50-50 Topgolf and Callaway, at the time of this merger, Callaway was worth $20 a share before this merger happened. And so now we can say that the Callaway half of the company is roughly worth $10 a share, right? Because now it's half. And so that leaves us with the more speculative, hard to kind of nail down valuation of Topgolf. And so the best way that the article's author goes about this, which I agree would be the best way to do it if I was going to run all the calculations myself, is to compare them to similar companies such as Drive Shack, or what he suggests is even better to do is Dave & Buster's, because Dave & Buster's is a lot more similar in the fact that it's a lot longer along its growth trajectory than Drive Shack, for instance. So the market values Dave & Buster's revenue at 1.7 times an average over the last 5 years. And in 2019, Topgolf had basically $1 billion in sales, which at a 1.7 revenue multiple would value the Topgolf business at $20 a share. And again, that has to be split in half because the whole company is half Callaway, half Topgolf. And so that is basically bringing us to a $20 stock price right now. And this was back in November, right? So since then, what has happened is the market has ran up a little bit more as a whole. Callaway stock price is around $25, and so it's definitely valuing the company a little bit more based off of its peers. If I was to actually look at what Dave & Buster's is right now, Dave & Buster's, as well as a lot of the COVID recovery stocks, have risen since November. Callaway included, basically anything connected to the economy, airlines, all of these things have and all the small cap companies have kind of ran up there. So that's probably, keeping Callaway comparative to Dave & Buster's and the other stocks that are pretty similar to it. So all of that is basically to say that, at the time of this article, reading off these calculations that I'm mentioning, saying $20 and it being $25 now does not necessarily mean that it's overvalued now. What I want to get into now, which in my opinion is kind of the most important aspect of the video, is on the speculative side of things, which basically means like, okay, we know what it is valued at financially, and on half of it from Callaway, because that's just a pretty much cut and dry valuation. And then the other side, which is more of a speculative valuation with Topgolf, that you have to do comparisons to Dave & Buster's and things like that. So I personally think if you're looking at the speculative side of things, and Topgolf and Callaway go hand in hand, they definitely build off of each other, I think Topgolf is going to continue to grow like crazy. And therefore the stock is going to benefit from that, because the whole company is going to benefit from that now that they're merged. So the reason why I think this is actually kind of backed up by some current data. The Topgolf venues themselves have had fairly impressive growth, with their revenue growing at a 29% compound annual growth rate the last 3 years. And the Toptracer revenue, this is crazy, has grown at an even more impressive 233% compound annual growth rate over the same time period. That's massive. Even a 30% compounded annually is a huge growth rate. And the fact that the Toptracer revenue has gone up over 200% over the same time period is absolutely crazy in my opinion. And so this whole merger is just absolutely fantastic in my opinion for long-term Callaway shareholders. You get a ton of value of them being together, whereas there can be a lot more Callaway gear. Some of the apparel brands like Jack Wolfskin that Callaway owns can be sold at Topgolf, and they can just totally feed off of each other, even to the more traditional side of the Callaway brand. And Topgolf getting more people into the sport of golf long term, the more traditional side of the sport, will also really help Callaway as well. And I just personally think Topgolf is the future of golf for young people, for people who want to get into it. I think Topgolf very well may be, it already kind of is, in the next 5 to 10 years or longer, be what bowling alleys were 30, 40 years ago, where everybody went to a bowling alley. And they got drinks and they got their food, and it was just kind of a fun hangout area that people went to all the time. I think that's what Topgolf already is in certain places, and is going to continue to be in a lot more places as it continues to grow. And this is the best way, in my opinion, to capitalize off of that future trend. So before I wrap up this video, I do of course always want to give a couple counter arguments. The counter argument to this deal is that Callaway, before the merger, was a growing, although very slowly growing, but growing, profitable business that didn't have a crazy amount of debt. And now after this merger, they're no longer profitable, because even though Topgolf is growing like crazy, they actually are not necessarily exactly profitable right now, which of course will change in my opinion in the long run, and a lot of future investors think so, or future looking investors think so. But that is kind of the counter argument to this deal, and what the naysayers or people who are not fans of it would say is that now the company is unprofitable, it's a lot more speculative, and it's just a lot more harder to value for all of the reasons that I went over earlier. For me personally, I think it's one of those risk-reward scenarios where the potential reward, at least in my opinion, and of course I'm not a financial advisor, everyone who watches my videos knows that, so this is just of course my opinion, but I personally think the risk is a lot lower than the potential reward could be. If you want to look into a sport industry and say, I want to invest in that sport, I think it's going to grow, Callaway's the one to do it. Titleist is another ticker symbol that you could look at that will definitely get you exposure for sure, but not as overreaching of exposure as ELY. Callaway, in my opinion, is the stock to invest in if you want to capitalize on this future growth. So thank you all so much for watching. I'm going to be trying to plan on posting a video at least once a week if not a couple times a week, maybe even 3 times a week if I'm able to find the time. But thank you all so much for watching. Let me know down below what you think. Like the video if you liked it. Subscribe to the channel if you're new and you want to see these type of future videos. And also comment down below any suggestions for ideas or stocks that you'd like me to look at. I'd be happy to make a video on them as well. So yeah, thank you all so much for watching. I'll see you in the next one.